closing journal entries. We've been talking about the accounting cycle and how we close our books to prepare ourselves for the next year. And there's not 3, but 4 closing journal entries. And if you recall, the first thing we do in a closing journal entries is we close our revenues, then we close our expenses, then we close income summary, and finally we close dividends. So let's take a look at, this is pulled from an adjusted trial balance, and let's run through those pretty quickly. So the first thing we're going to do, as you said, close revenue. So we're going to debit our revenue and credit the income summary account. And our revenue was $200, so that will close revenue. Zero it out. So now what's the balance in revenue? Nothing. Secondly, we're going to close our expense accounts. So we're going to debit income summary, and we're going to close each and every expense. So we're going to credit insurance expense, $50, supplies expense, $50, and interest expense, $50. So debit's got to equal credit, so I've got $150 of credit, so income summary is going to be debited $150. The third thing we do is close income summary. Now, income summary has credits of $200, debits of $150, so what's its resulting balance? It's a $50 credit. So that means we made a $50 profit, didn't we, on our income statement? So let's close that. So the first thing I'm going to do is debit income summary, and I'm going to credit retained earnings. So I'm going to debit income summary, $50, and I'm going to credit retained earnings, $50. Notice I did not close the $360 of retained earnings. Why not? Because that's the balance, and this is the closing entry. So this $50 will what? Credit, increase that balance, won't it? So what's the last closing entry we're going to make? Dividends. So we have to close dividends. Now dividends has a debit balance. So how will we close it? Well, we'll debit retained earnings, and we're going to credit dividends. By making this entry, will dividends, instead of having a debit balance of $60, now have a balance of nothing? You bet. So, when I finish doing these closing entries, if I was to look at the retained earnings account, remember that retained earnings started off with a balance of $360. That was its balance. It's also known as its beginning balance. And then what did we do to retained earnings? Well, in step 3, we increased our retained earnings by $50, which was the amount of our net income. And in step 4, notice we reduced our retained earnings by $60, which was our amount of our dividends. So if I wanted to know what the balance was that ended retained earnings, which is just like our statement of retained earnings, isn't it? I would add 360 plus 50, which is what, 410, minus 60, meaning our ending balance in retained earnings was $350. So could I, after doing those closing entries, basically know what my statement of retained earnings look like? Because that statement mirrors what's going on in the retained earnings account, doesn't it? As a result of the 4 closing entries. Step 1, close revenue. Step 2, close expenses. Step 3, close your net income or your net loss, in other words, your income summary account, to retained earnings. And finally, close dividends.